Over the last 45 days, Japan's bond yields rose by more than 100 basis points to a record 3.2%. Now, what that means is that almost $500 billion worth of 40-year Japanese government bonds have lost 20% of their value in the last 45 days. It looks an awful lot like Japan's bond market might just be collapsing. As this chart here from the Financial Times indicates, Japan's economy is in fact declining. It appears to be going into what you would consider a serious recession. In recent days, Japan's government has admitted that their debt to GDP ratio is one of the highest in the world. Tokyo assesses that it is now double than what the United States debt to GDP ratio is, which is a shocking statistic given how indebted we all are. And the Japanese government believes that their debt situation is, in their words, worse than Greece. Meanwhile, President Trump's big, beautiful bill has passed the House, but barely, as it is moving to the United States Senate. But some of the most prominent conservative members of the House, such as Representative Thomas Massie of Kentucky, as well as Senator Rand Paul of Kentucky in the Senate, are attacking the bill for adding tens of trillions of dollars to the national debt over the next decade, at a time when the U.S. debt load is already seemingly insurmountable. My next guest, Dan Collins, is the founder of Tyrell Chemical. He has decades of experience running factories in China, and he is the host of a new podcast called Chaos Incorporated. I can't think of a more appropriate title, Dan, for a podcast at the time we find ourselves in. It's good to see you.
Great to see you. Great to be back.
I don't think there might not be a lot of people in the audience following the Japanese bond market or have any idea what that really means or what the effect on the United States is of the Japan market, and if it is indeed collapsing. So could you give your insight from working overseas as much as you have? What does this all mean?
Yeah, Japan is, as a country, is really a distressed asset at this point. It's really the canary in the coal mine of the global Ponzi scheme we've been living through for about 30 years now. And many of us have been saying, watch Japan. When Japan goes first, the rest of the house of cards are going to fall. So what do we mean by that? Your chart showed 240% roughly GDP, debt to GDP. But it gets worse. This country, half of their debt now is financed by the government, meaning they print money to fund their debt. Their stock market, 80% of the stock market in Japan is owned by the government. The government is printing to fund the government and the stock market, right? The demographics in Japan are horrible, okay? That Japan lost 1 million people this year through population attrition, just people dying out. Wow. They're going to lose 1.3 million next year. And they're slated to lose 40 million people over the next 30 years. It's the oldest country in the world. Adult diapers have outsold newborn diapers for 15 years now. So this is the demographic backdrop. We'll go more into the financial backdrop, but then on the corporate backdrop, you see Nissan right now, second largest car maker. They're close to bankruptcy. They're selling their corporate headquarters. They're closing 8 factories. Japanese corporates have missed every technological change since the Sony Walkman, okay? They missed AI, they missed EVs, they missed the cloud, they missed Web 2.0, they missed mobile, they missed software. So they have basically been stagnant. You've seen the Samsungs replace the Sonys of the world, right? Now you're seeing the Chinese EVs replace the Japanese EVs. So all of this corporate and demographic backdrop with the 30-year Ponzi scheme of them just printing money. We've never seen a bond market this big move this fast. And how this is going to affect everyone around the world is what they call the Japanese carry trade. Nobody even knows how large this trade is. It's basically global institutions going to Japan, getting 0% interest rates, which no longer exist, taking that money and investing it in their home countries for higher yielding assets. Well, that's now dying. That's dead. Okay. That's up to $1 trillion that could just spark a wildfire of financial contagion. And that's what has got people spooked now about the recent bond market moves in Japan.
You said that we would walk through the history of the economics in Japan. You shared with us this 40-year yield chart. So can you explain how we came to this point?
Yeah, so Japan is when we were going through COVID, Japan, all interest rates globally were kind of suppressed, and then they've out of nowhere the last several years have come up to that's 3%. I think it's over. That's the 40-year. The 30-year, which a lot of people look at, is over 3.5% now. So these are unprecedented rates. Japan was at near zero for 20 years. There have been Japan has been, as I mentioned, the carry trade. But it's just been a stagnant economy that they have been the leaders in this government printing money to fund everything and not letting the markets work. And now it's basically a government funded economy that now is facing its reckoning day finally, which is they're probably 5 years ahead of us.
Well, that's what I was going to say, especially with the new big beautiful bill that adds trillions of dollars and more spending. Someone who's long warned that we're headed for a reckoning and is even more concerned now that this bill has passed the House is our friend, the congressman from Kentucky, Thomas Massie, who describes Trump's and Johnson's statement that the bill has long-term deficit reduction as a joke. In fact, let's listen to what he said.
We could have done this differently. We could extend the tax cuts and paid for them, but instead we're not. I mean, over here, the people in favor of this bill say that under the policies of this bill, we're going to add $20 trillion to debt over the next 10 years, which is $3.5 to $5 trillion more than would have been added otherwise.
This is deficit neutral.
Yeah, that's a joke.
He says this is a joke. Dan.
Yeah, if these numbers are accurate, where you're going to add 20 trillion in the debt, it can't happen. I have been a favor to some areas of the bill. So, for instance, what everyone talks about are tax cuts. So, 2017, when Trump put in the original tax cut, we took corporate tax rates from 35% down to 21%. This bill will extend that. This will make them permanent. You have to have that in. People don't realize we were deindustrialized, say, from the late 90s to today, because we had the world's second highest corporate tax rate, only behind North Korea. Okay, when you take 35% federal, you add in state, local, you add in healthcare, it makes 0 sense to set up a factory in the United States. And that's why they all left. We lost 80,000 factories in that time frame. We need to bring those back. If we don't extend the tax cuts, we will completely derail the reshoring and reindustrialization projects that the U.S. has to undergo. With that being said, that's on the tax side. There's a lot of other great things in the bill, cutting the Department of Education. 1979, we put in the Department of Education. We had a 99.4% literacy rate. Today, 77%. 20% of Americans can't read or write at a 6th grade level under the Department of Education. Get rid of it, send it back to the states. Totally agree. On the spending side, I will agree with Congressman Massie and the others. Although I think we have to avoid being completely ideological on these things. A little bit when we're bleeding like we have been, the Biden administration has set us up to go 50 trillion in debt by the end of the next 10 years, which is completely unsustainable. If we don't, if we try to go complete austerity and cut everything overnight, you're going to crash the economy. And restructuring is going to be a lot easier if we can keep the economy at even levels. But obviously 20 trillion, the government's so wasteful that obviously a lot more spending cuts could happen. There's no doubt.
Yeah, there is definitely some fluff in there that could have been cut. But to your point, especially on the reindustrialization aspect of this, because that's something we're very focused on this show, is bringing back manufacturing to America, which is going to take longer than just implementing this bill and passing it and all that. It's a whole process. But let's say we can bring back some manufacturing to the United States, that will offset the deficit as well. So they could be correct in their statements if you look at it like that. And I do remember with the 2017 Tax Cut and Jobs Act, with the GDP growth we had after that, we actually saw real wage growth, which we hadn't seen in the United States in decades.
Exactly. That was the first time in my lifetime we've seen middle class wage growth. You could see it. You could drive down I-95 and steel mills are advertising for employees, and you could see the economy come back to life. And that will happen now on steroids, under the tariffs, under the reindustrialization. We will get the job growth. So I absolutely think there's big upside to the revenue generation side on the plan. And like I said, but it is a balancing act. The government is extremely wasteful, extremely corrupt. You saw that come out with Doge. It's just insane. So you probably could cut more, but you don't want to go through austerity right now because austerity could trigger the eventual Ponzi collapse, right? We're in a Ponzi scheme, and you can't taper a Ponzi scheme, as some people like to say. So it's a balancing act, and I'd like to see the numbers on the 20 trillion total. If that's really the case, that's too much. Probably that all can't be offset. But the tariffs and the bill itself, we have to keep in mind, is not going to fix everything, right? We have to be realistic about that and very practical minded on fixing the country and how it happens.
Talk about that Ponzi scheme, the smoke and mirrors. What about the stock market? Specifically AI, notably NVIDIA. This company has been one of the key reasons why the stock market has done so well, right, in recent years. People ask, well, how did it keep just rising and rising, though we know that our economy has been going tanking and tanking. The prominent financial publication Seeking Alpha is bearish on NVIDIA's continued stock dominance. We have some quotes here from that article. I'll just read one right now. Earlier this month, the market positively reacted to the elimination of the AI diffusion rule by the Trump administration. If it went into effect, it would have prevented companies like NVIDIA from selling its most advanced chips to countries which have been put into lower tiers under a 3-tier system. Even with the AI diffusion rule gone, NVIDIA is still expected to take a $5.5 billion hit in sales in Q1 due to the latest stricter export restrictions, which make it nearly impossible for the company to sell the H2O GPUs in China. An area of your expertise. So what happens to the stock market, Dan?
Well, the stock market is, my opinion, it's overinflated. Most of these companies, their asset, they don't have the profitability to justify their valuations. NVIDIA in particular, it's hard to say. I mean, the AI in particular, we are spending trillions of dollars on AI investments. You're talking about all the, not just the chips, but the power consumption that goes along with it, the data centers. And there hasn't been $1 yet to incremental revenue for these companies. So they are, the absolute amount of money these companies are investing is absolutely off the charts. We've never seen anything like it. Regarding the China issue, as an economic nationalist, I believe I want American companies dominating everywhere. I want them selling into China because you take those profits and you reinvest into the next chip. So it's not so important of what's today's chip, but it's the next chip, right? So what we've done to NVIDIA is we're blocking them from the world's largest market. General Motors at one time sold more cars in China than they did in the United States. So you want to, if you want to be strong economically, you need to play and dominate in markets all over the world. That's what we were from 1945 to 1990. And that's where we want to go back to. So, my opinion on the NVIDIA stock, is it overvalued? It's hard to say. They do have competition coming online from China. But for what they do in GPU parallel processing, they are at the top of the game without any competitors right now in the U.S. So, we'll see in terms of the overall stock market if it can hold up or not. But it has been focused around those 7 tech companies, that you mentioned.
Yeah, a lot of people wouldn't remember that time about GM selling more over there than here. I too want America to dominate. I think this was a very fruitful conversation on how we can, given the provisions of this bill. Though it might have some drawbacks, I'm glad to hear you feel that there are some really strong, successful aspects of this bill, and we'll be focusing on that going forward. Thank you so much, Dan. It's good to see you.
Thank you, Emerald.